Now that we've spoken a little bit more about my non-controlling interests, let's look at an at-acquisition consolidation journal entry example where I do have NCI. So in this example, the parent obtained a 75% controlling interest in S for 100,000 Rand. So the 100,000 Rand is the cost of the investment and the consideration that P paid to gain this controlling interest. The at-acquisition equity of S consists of ordinary share capital of 80,000 Rand and retained earnings of 5,000 Rand. So there's a net asset value at acquisition date of 85,000 Rand, indicative of the value of that business. Let's prepare the at-acquisition consolidation journal entry. We have the information to eliminate the at-acquisition equity and the at-acquisition investment value. Don't we need more information the moment we have NCI? Yes, we do. What do we need? We need to know how the parent decided to measure NCI at acquisition date. And that measurement options are either at fair value or at proportionate share. So let's now look at the at-acquisition journal entry if we assume that the parent company decided to measure NCI at acquisition date at their proportionate share of the net assets of S. When you prepare your at-acquisition consolidation journal entry, the first thing you always do is to eliminate your common items, which is the equity at acquisition date of S against the investment made by the parent. This 80,000 Rand and 5,000 Rand at acquisition equity is indicative of the value of the business and the net asset value of S at acquisition date. The parent was willing to pay 100,000 Rand for his 75% proportionate share of that 85,000 Rand. On top of that, the parent measured NCI at their 25% of the 85,000 Rand. So NCI is now recognized as an equity item, a credit leg, with 25% of this 85,000 Rand at acquisition date. So what we are doing here is we are moving out of this at acquisition equity of S a 25% proportionate share and giving that to NCI as their starting balance. So we debit the full 100% equity of the subsidiary, 75% of that eliminates against the investment made by the parent, and 25% of that is moved to an NCI balance at acquisition date. As a result of this, we end up with goodwill in this group of 36,250 Rand. So what does this goodwill of 36,250 Rand mean? It means that the parent was willing to pay 100,000 Rand for his proportionate share, and the parent measured NCI's proportionate share as 21,250 Rand. And what the parent was willing to pay for his portion, together with what the parent measured NCI to be, is more than the value of the business of the subsidiary at acquisition date. And as a result of being willing to measure the proportionate share higher than the value of the business, you end up with an asset, expected future economic benefits. The parent can also decide to measure NCI at acquisition date at fair value if they are of opinion that that is a fairer representation of the value at acquisition date. The fair value of your non-controlling interest will be given in a question. So when we do the at acquisition consolidation journal entry, always start by eliminating your common items, which is the equity of S against the investment made by P. Again, P was willing to pay 100,000 Rand for his 75% controlling interest. NCI is now measured at the 20,000 Rand given amount, and I have resultant goodwill of 35,000 Rand. Let's just understand the goodwill again. The value of the subsidiary's business at acquisition date is 85,000 Rand. The parent measures the business combination at 120,000 Rand, which comprises of his 100,000 Rand that he was willing to pay for the 75% interest and the non-controlling interest value of 20,000 Rand. So the parent is of opinion that there is a future economic benefit from this business combination that is recognized through the goodwill as an asset. Please note that it's definitely also possible for there to be a gain from bargain purchase through the at-acquisition journal entry when you also have NCI. Hopefully, you have realized from the previous discussions that your goodwill or gain from bargain purchase that originates through the at-acquisition journal entry is something that is calculated based on decisions made by the parent and not merely a balancing entry in that at-acquisition journal entry. So I've summarized it here that goodwill would be the situation where what the parent was willing to pay for his proportionate share together with the parent's measurement of NCI at acquisition date is higher than the net asset value of S at acquisition date, which is represented by their equity at acquisition date. And you would have a gain from bargain purchase where what the parent is willing to pay for his proportionate share and the parent's measurement of NCI at acquisition date is smaller or less than the net assets of S at acquisition date represented by the equity. Please note that goodwill or gain from bargain purchase is presented as one amount in the consolidated financial statements. It is the total goodwill or the total gain from bargain purchase. From this discussion, you would have realized that a portion of goodwill can originate from what the parent is willing to pay for his proportionate share, and another portion from the measurement of NCI, and the same goes for the calculation of gain from bargain purchase. But in the end, you take the total goodwill and the total gain from bargain purchase and present that as one amount in the consolidated financial statements. I would also like to explain that concept of only having one goodwill or one gain from bargain purchase in the group by using the at acquisition section of an analysis of equity. The one I'm looking at now comes from your Introduction to Consolidations textbook, and it's on page 72. The background to this example is that the parent obtained an 80% interest in the subsidiary for a consideration of 20,000 Rand. The parent also measured NCI at acquisition date at their fair value of 6,500 Rand. So let's see what happened here. The parent was willing to pay 20,000 Rand for his 24,000 Rand 80% interest. That led to a gain from bargain purchase of 4,000 Rand. The parent measured NCI at 6,500 Rand, and if you compare that to their proportionate 20% share of the net assets of S, it gives you goodwill of 5,000 Rand. But you have to calculate the goodwill or gain from bargain purchase in total for the group as a whole. And that is where you compare what the parent was willing to pay for his proportionate share being the 20,000 Rand, plus what the parent measures NCI as, being the 6,500 Rand, giving you a total of 26,500 Rand against the equity, the value of the business of S in total at acquisition date. And now you can see that the gain from bargain purchase for this group is 3,500 Rand. You will not show this 500 Rand goodwill that originated from the measurement of NCI anywhere in the group. You will only see this amount of 3,500 as a gain from bargain purchase.